Right, good morning, everyone. As we head into European trade on Tuesday, the 22nd of August, there's not a great deal of fresh headlines out, certainly over the weekends and into Tuesday, as well as we head into Jackson Hole a little bit later on in the week. Obviously, we'll break that down a bit more as and when we come to it. At the back or towards the back end of this week on Thursday, Friday, obviously into Saturday, but markets will be closed on Saturday. So we're expecting the main speeches Thursday, Friday. Jerome Powell, Christine Lagarde, two major speakers, along with some other central bankers as well over the course of the next few days. But markets a little bit disjointed as we head towards that, which maybe is to be expected, with some potential speeches that may shake up markets a bit. But apart from that, you see soaring yields, they'll leave stocks struggling for headway. I mean, I'm not so sure. I mean, stocks I've had a bit of upside over the last kind of 24 hours since markets opened for trade post weekend. But you've had a bit of upside in yields, a little bit of upside in stocks, and the dollar's just chopping sideways. So markets a little bit disjointed, as I said, as we head into later on this week. Maybe that is set to continue over the next couple of days. One thing of note, though, Japan's 10-year yield hits over 9-year high, crosses BOJ intervention level. Now, the Bank of Japan did intervene on August the 3rd when the yields popped above 0.655%. But this move, popping above 0.655% overnight, was driven by just general moves in the bond market. You see the US 10-year popping higher, or the yield on the US 10-year popping higher yesterday, over the course of yesterday's trading session, and this is driven by that, not like a speculative move to test the central bank. So central bank did say at a previous meeting that they were happy, but were accepting of it moving up towards 1%. They did not set a kind of hard limit of 1%, but they said it wasn't, pretty much said it wasn't the end of the world if it did make it up towards 1%. So if that continues to push higher above that 0.655% level, you'd have to imagine the Japanese yen certainly is a bit of a bounce back and does begin to push higher off the back of that. But we'll look at some charts once we get around to it in a minute. Oil dips on possible easing of tight supply. China woes hurt demand outlook. I mean, that's the kind of story, one positive, one negative, which, I mean, talking about Iraqi oil exports to resume and then a faltering Chinese economy. I'm not a fan of articles like that where it's 1-0 and then 1-1 basically. It can just give you a reason for why things are up, why things are down. Doesn't really help you with your trading with anyway. But if Iraqi oil exports do resume, well, then that is likely to cause a bit of downside in oil. If they do not resume, well, then that causes a bit of upside. Well, we've also got the Chinese economy continue to undercut the global demand outlook, which, if both of them continue to play out, if Iraqi oil exports resume, it cuts supply or increases supply, should I say, and if the Chinese economy continues to use less oil, well, then that again decreases demand. So increased supply, decreased demand causes the price of any asset to move lower. So something to keep an eye on in terms of downside for some oil, but it's a bit hearsay at the moment, and you'd have to imagine the move off the back of the Chinese economy struggling is approaching its end at some point, or the sentiment from that is approaching its end at some point. But we'll have to see as we go on through the coming trading sessions. But apart from that, talking about Jackson Hole a little bit later on in the week, it's potentially crucial speeches. I mean, how much is he really likely to say? He's probably likely to stick to the script of data dependent going forward. They're going to monitor their incoming data. They've got no decision made on further interest rate hikes, all that blah blah that they have been talking over the last number of weeks and months. So I wouldn't expect too much out of it personally, other than sticking to the script. But if they don't stick to the script and they do something outside of that, that's where the move comes from, isn't it? But apart from that, you have a bit of stock index upside, mainly European markets and Asian markets. US markets are flat. I mean, 0.02, 0.01, 0.03, and then 0.07, clearly flat across US equity futures. But European equities, Asia Pacific equities are all higher across the board, which then has sparked some downside in things like the US dollar. Japanese yen is a bit mixed, obviously, speaking about what we spoke about a minute ago with the Bank of Japan, but the Aussie and the Kiwi are up in line with stock indexes. Now, stock indexes, certainly month to date, month of August has been a bad month for stocks. It's also been a bad month for the Aussie and Kiwi, so a bit of a bounce back is not unreasonable when it comes to those couple of asset classes. Then it's been a positive month for the US dollar. Again, that's just a pullback against recent moves from a bit of a pullback from recent moves over the course of this month. You look at bonds, US yields higher again, bonds being sold, yields higher. That would normally spark a bit of dollar strength, a bit of equity weakness, which again further reaffirms markets are slightly disjointed as we head into European trade today. Nothing on the economic calendar, nothing overnight on the economic calendar, nothing today on the economic calendar of note. There's a few speeches from a few US officials, some home sales figures from the US, but nothing really of note over the course of the first 2 days of the week. No high impact data Monday, Tuesday. We'll get into that a little bit later on in the week. But you can see over the course of yesterday, your Aussie kind of chopping sideways, Kiwi, Euro, Sterling, they're all popping higher at the moment, which is interesting. You get dollar Swiss having an attempt lower, dollar Yen's having an attempt lower, dollar CAD's having an attempt lower, and it's pretty broad-based US dollar weakness through the lows, through the overnight lows over the course of this video, really. Couple that, the fact that equities making a slight attempt higher, but we are approaching European Open, so I don't know if I'd read too much into that, but it is clearly a move counter to the trends. No matter which of these you look at, the trend is clearly down. There's a bit of a bounce back for now on these trends, but a few inverse head and shoulders across a bunch of these. You can see S&P, the Dow Jones, the Nasdaq all posting a bit of inverse head and shoulders. The Nasdaq one worked extremely well, popped through the neckline, came back and retested it, and then popped higher. So a couple of good reversal patterns to help pick that, but in reality you're probably getting stuffed on the S&P and on the Dow Jones, if you look to try and trade that. But bond yields not having any sort of downside or any sort of upside, so I'll be careful with those stock markets until these bonds get moving, and I'm not so sure I'd have full confidence in that US dollar move lower, and I'm not so sure I'd have full confidence in that move higher in equities. So I'll probably wait for the Europeans to open up in about half an hour, 35 minutes time. Wait to see what they have to say for themselves at 8 o'clock this morning. But no high impact data of note. Gonna have to work off your charts, work off your cross asset correlations, see what you can find in terms of markets moving in line with each other. But Jackson Hole later on in the week, number of speeches from a number of central bankers. We'll have to wait and see what they say a little bit later on in the week.